So to start off, doing a little bit of a market overview and trade recap. So initially, why did we go long in the morning? To start off, I sent out the vol reversion levels like I do every morning. I also started saying at 6:37, data's in another tight range today, or tight range day, potentially boring day, and that's exactly what we kind of had. So we have consumer confidence releasing at 7 a.m. today, so be aware. So at 6:57, rejecting raw Gex flip at 60.65, right? So this was that initial Gex flip zone that I had drawn out for everybody in the morning, and that's the one that I was talking about. Then the next thing I said at 7 o'clock, I said S1 and 50 went long right at 7. So right around on this candle. So we got a really nice move to the upside. So why did I go long at S1 and 50? Once again, very basic setup. The typical bread and butter setup, right? If you're at a Gex range, you have your low and you have your high. And today the low is at 50. And on top of that, this box is drawn here as the long zone. Why? Because it takes into account S1 as well as that 50, right? To me, that's a perfect bounce. So that's the initial long side or why we were long bias right there, right? The next thing to look for is what, guys? Someone in chat talk about it or bring it up so we make sure everyone understands the typical bread and butter setup. DGEX above spot, perfect. That's another one. That's a good thing, right? We had that DGEX above spot at 60 or 65, I mean. What's the next step? The next thing I look for to confirm our bias. Positive delta, perfect. Sweep lows, perfect. So once again, we had all of those things, right? So we had the sweep of the low, we had a touch into the long zone that takes into account S1 and the Gex, another Gex wall at 50. On top of that, we had a positive delta. And I believe we even had some SMT, right? So we had all the confluence to go long, right? There's nothing else written there except for me saying S150 went long, right? And then confirmed later, not the bearish SMT. SMT was at the highs when we started pushing up, but I think this continues. Why? Because the main magnet is at 65, right? So currently at Gex flip again, 60, 65. We need to break above that. So I said mixed deltas, right? Long entry was perfect. S1 plus DGEX wall, positive delta on the 15-minute as we approached it. Solid bread and butter setup, right? And if you notice, this is the same candle, right? 7657. This is the 7 o'clock candle, the 7 a.m. 15-minute candle, and it had negative delta. But look at what happened. It flipped as it closed, right? So we had confirmation that buyers were still stepping in even when that negative print happened, right? So they took over, right? So we had perfect entries pretty much at the low of day for that move up, right? So that's pretty much the main thing. And I was pretty bullish bias. Why? Because we had just consecutive positive delta, even when we are up here. So that bullish bias was, it worked out very well, given that we held the levels pretty much going up. We rejected R1 and then we came down lower. But on that 15-minute time frame, if you take a look at it, right, those 15-minute candles that were here, where is it? Right here, right? These these three red candles right here, they carried positive delta. So for me, that's pretty strong confirmation that, okay, we're going to tap 65, right? So that's the main trim point that we got out at. Also would have been a very good short. But for me, this candle right here carried negative delta, right? Although we closed above on the 15-minute, it carried negative delta. So this would have been a really good short, just given that we had 50 on board still at the bottom. Me personally, I just didn't take it because why? There for me, I don't base it off of just one consecutive green or like consecutive delta candle. I need multiple. I want at least 2 to 3 to 4 to 5, right? At the very least, I want 2 to 3. And only having one to me isn't good enough, right? Maybe you could have entered here, but once again, right, this would have been the best R to R setup because if we had closed above with a positive green candle right here, let's per se like this, right? Something like that. And that candle carried negative delta, then I would have been short. However, that was not the case. This candle carried negative delta, but it was just too far gone from the entry that I would have preferred right here because the R to R is now a little bit more scuffed, right? So even if you're targeting 50, it would look very different from that case. It would, in terms of R to R wise, right? It would look something like this, right? As the initial versus something like this now, where it's like down here, your stop loss is maybe a close somewhere above that, right? So something like this. So R to R wise, it's a big chunk, right? You go from 4.62 down to 1.3. So it's just not the greatest R to R. So there's specific reason. And you always hear Joe and I talk about taking good R to R trades, and that's just there's a very specific reason for that. And it's because that we want the best setups, right? This in comparison to this is just not it, in my opinion. This is a trade that I rather miss. 10 points down versus 15 points down. That's a big R difference, as you guys can tell just from the ratio itself. So that's just not a good trade, in my opinion. Although it would have worked out, just not the best setup. Was there the DGEX build up at 50 as well today? Yes, it was between 50 and 65 today. Just those two bars. Everything in between was negligent. Nothing above, nothing below either. Does that make sense, guys? So that's pretty much why we took this trade. And on top of that, sorry to bring this up as well, right? Timing wasn't there. This candle happened at 9 o'clock. No, you're good. This candle happened at 9 o'clock. Remember, we specifically talk about timing of trades. That's very, very important, right? Or else you're always going to be stuck. Like an example is like this day, 9 o'clock. Okay, sure, you get a good move down, right? And you go back to 9 o'clock here, you don't get a good move down, right? 9 o'clock, 9:15, 9:30, then you get that move down, right? So same thing here. 9 o'clock, you get a decent move down. But timing of the trade just isn't that great, in my opinion, right here. Once again, 9 o'clock, you get that move down. But I'd rather not take that risk because you get something like this a lot of the times where it's 9 o'clock and post lunch, you just get chopped, right? Same thing here. 9 o'clock, you ended up getting a pretty decent move. But right here, 9 o'clock, you get chopped. 9 o'clock, you get chopped, right? So it's just overall not the setup that I like to take. 9 o'clock, you get chopped. 9 o'clock, once again, you get chopped, right? So timing of trades is very important. So I try my best to not take trades past 9 a.m. on PST time. Does that make sense, guys? How many trades do you take today? I took three, but one of them I held basically till I sold the last one. Second one was I added to like I added ODT positions on top of the one DT that I had. And the third one was the same ad. At this point, I added both SPX and QQQ. Why? I just figured it would be a really good idea to add QQQ since it looked a lot stronger than SPX. So those second two or those last two trades that I took were still while I were holding was still when I was holding the first initial one. I never sold out with those first ones. Those first ones went like 30% max. So the support resistance levels is that TV indicator or proprietary. Those are proprietary to TraderLink. However, they will be released to the public once finished the display. It's been tested and we're pretty solid with that now, but we're now going to be releasing it onto the dashboard soon. So people don't have to copy and paste it from me, and I don't have to send it out every morning. People will just have access to it. So soon that'll be released, hopefully within the next month. Yeah, I'm pretty sure everyone loves the levels. I mean, they worked out so perfectly today if you take a look at it. Right, that morning bounce, this was a perfect trim level at 50. If you look at even this level of like the S1 plus DGEX flip or plus that 50 wall, right? You just draw a zone from 50 the S1 to the gamma wall, and it's literally perfect, right? We never got a close below. So you have no reason to go or to stop out or exit. How does volume reversion? It's not volume reversion, it's volatility reversion levels work on SPX when its volume is kind of artificial. Yeah, so it's not volume reversion, it's volatility based, if that makes sense. Yeah, no problem. But yeah, that was pretty much it for the main day, right? We got out at 8:23, right? Couldn't have gotten a better sell, pretty much at the highs, the relative highs, right? 823 is right here. Or that was the last stop out. Trim position 822. So same thing, just really solid overall day. On a choppy shit like this, we still managed to hit 100%. Any more questions? When looking for positive delta as confirmation, is the amount of delta taken into account? Are you looking more convinced if it's 5 billion net gamma, 1 billion little too, is too little? Personally, on days like today, we opened negative, I think. Yeah. Well, you weren't awake actually. We opened in a negative and then we ended up in a positive. Like overall today just isn't the best day. Like over 75 gex or 65 gex flip, that's basically when it goes positive, right? So it's kind of just sitting around here. Like 60, 65 is like that break between long gamma or positive gamma versus negative gamma. So with that being said, it's kind of a day like today isn't the greatest, and as you can tell, right, it didn't provide the best setups. Yeah, what okay, so let me pull up YouTube. So if you look at, oh, he doesn't have net. So I guess this is close enough, right? Speed and gamma are relatively similar. So the flip is right here, right? Between these two. You have 60 marked out right here, and then it flips to positive at 65. So that's pretty much how I mark out that zone. I pretty much just go in here, draw the square, and then mark out the levels literally to a T, and then go from there. And then that'll be the Gex flip zone, right? The long zone is literally just this. So it's same thing, take the volatility reversion level at 51.87. 87, and then that's basically like another zone that you have to go look for a position. That's pretty much how I look at it. Right, 15-minute held above. So at the bottom today, we had over negative 3 billion gamma. Does that justify V-shaped recovery we had today? Not entirely, but remember, just overall negative gamma, when we get lower, the more the negative gamma that's there, the more you're prone to having higher volatility in the day, thus potentially leading to a V shape. Once again, right? You're not always gonna have a V shaped recovery, but you are prone to it when you are in a negative gamma situation. So that's just something to consider. It's like, okay, if you missed a short, right? Like this one. If you missed a short, you had every reason to go long here at 50. Why? Because number one, there is no interest pickup below 50. Number two, the next thing is I believe even here, this candle right here carried positive delta, right? And then we moved up, right? That's pretty much like the main things. On top of that, we held the volatility reversion level, and we didn't get a close below the zone. So overall, like this was a better long. Is DGEX flip relevant as well or only GEX flip? And both are relevant if you're stuck in between them. Like if there's 70-75 flip versus 55-60 flip, right? And you're stuck in between those, then you're likely just going to stay in between them all day. Those are the situations in which I personally don't like trading because it's very prone to just chop. The next thing that plays a role in that, in my opinion, is like I personally watch more for raw Gex flip for the very reason that it's a little bit cleaner in terms of like the image that it produces. De-adjusted is more so for the magnet. And when it comes to like raw, like Gex flip, I usually tend to use raw. What made you use 5450 for longs? It lined up with our volatility reversion level, right? So we had this zone here in between. The zone was created from the volatility reversion level as well as that 50, right, Gex wall. And then when we got down to this area, the footprint chart printed a positive delta showing that buyers were in control. So once again, the setups are very simple. It's like, okay, where's the magnet? If the magnet's above us and we're approaching a Gex zone plus a volatility reversion zone, and if we're at that vol reversion slash Gex level and we print positive delta to go back up, showing that buyers are in control, then I'm going to take that long pretty much. So 54.50 was a Gex wall, correct. There was no pickups below that either. It was just 54.50 today and 65. Right, if you look at this, there isn't much pickup below, right? This is 50 right here. Everything else is pretty much negligible in amount, right? And then 65, this is raw, but so this one more specifically is a clear picture, right? So you have these two big walls right here. The bigger one's always going to tend to be the magnet. Having trouble in looking at skew on gamma exposure charts, what is being measured? Fixed strike or something else?
Well,
IB skew is a fixed strike.
it's fixed strike.
Yeah, fixed strike volatility. Yeah. So like if you notice this, right, there isn't much pickup here, a negligible amount, right? No pickup here, once again, negligible amount. So with that being said, this is the defined range for the day. It's all about like overall visualizing what is the highest amount of gamma exposure, right? Those usually will tend to be your range for the day or the main levels of interest for the overall intraday. Right. So all this is just bullshit, even more bullshit, right? The two main pickups are 50 and 65. And if you look at today, we respected them within plus minus 5 to 10 points, right? Or plus minus 5 points on each side, right? If this is 50, we tapped 46, right? This is 65. We got up to 72, but ultimately we closed right at 69 within tolerance of 5 points. There's a small note at 5,400. No, not a chance. That shit does not interest me at all. That's just like the biggest omega bait that you could take. Because remember, right, gamma levels are more impact or most impactful at the money. So if you have something super far out the money, it's not going to have any impact, right? So understanding the gamma curve is super important because it shows you exactly why these levels work so well in a sense, right? Because when you reach these certain gamma exposure levels, the impact curve is literally at the money. So if you have a bar like this and a bar like this, and spot price goes here, the gamma curve literally looks like this, right? So anything further out, it would be like this, and then another one down here, let's say for 5,400, right? Um, we're not even near 5,400, so it has no effect on me in terms of like dealers hedging that position, right? This is 54.50, and then this is 54.65. There's a charger next to my bed. How close does it have to be? When it goes out the money. So like one out the money, pretty much. That's basically when it comes into impact, and which is why we recommend plus minus 5 points ish, right? If it's one at the money versus one in the money. That's when we, that's the main thing of understanding the curve. It's like, okay, these levels are reactive in the day. So it forces, number one, it forces you to wait for those levels to hit. Um, um, and on top of that, like the only time, once again, right, ABS DX magnet is always going to be the highest exposure. So that's basically the main magnet for the day. So once the next step for you as a trader is to be patient and have us go to 50 for it to be impactful as the next one, right? So if you have the DX flip or the magnet at 65 and we're sitting at 50, then it makes sense that, okay, this would be a potential area to go long or look for longs. How close does it have to be? Oh, I just answered that, right? So that's the main key thing of DEX, right? It really forces you to wait for these levels to hit, which is a really good thing because a lot of people lack patience in the market and people will literally just buy in between while you're in between DEX levels. It doesn't make sense to do that. When there are two equally large gamma bars like 54.50 and 54.65 and spots in the middle, how do you gauge whether price may go one versus the other? Would you just wait for? Yes, I will always wait for one of them to be tested. I'm not taking any trade really in between those. It just doesn't make sense. It's just what you were talking about. Yeah, exactly. These dogs chill.
You know.
No, but these dogs are going crazy. Can you lay down? Yeah, no problem, guys. Tina, stop fucking ripping your blanket, bro. All right, guys. I think I'm gonna call it here because my dogs are going crazy. Usually that means I need to let them out. But we'll be back again live in the morning at 10. And then we'll also Jesus, dog's calling me. And then we will go over or you'll have the commentary section as well as usual. So that being said, thank you guys for tuning in. Thanks so much for the information. Can't make all of these. Yeah, it's recorded too, so I'll upload it whenever it's done. You guys can review it. But thank you guys for tuning in. And I will catch you guys in the morning. As always, keep moving forward. Thank you guys.